How's it going, traders, and welcome back to mentfx. In this video, we are going to be talking about how I passed the verification overall. As you can see, the verification is not that sexy, but in the end, it reached the 2,500. We've passed everything, just waiting on the minimum 10 days. How we passed the verification with specifically this one trade right here, which overall ran 1 to 30, but I think I only closed it at like 1 to 20 with my proper risk management since it was the verification. And how with that verification, I afforded this Lamborghini right here. That's actually, hold on. I think that one looks the nicest. Or maybe this one. How I afforded this Lamborghini right here. How I got this Lambo in literally 1 day trading my verification. And then how I also got this Rolex and my friends, they also got Rolexes, as you can see. So we're rich now. Feel free to join the mentorship if you guys want to learn how to do this too. And let's get into how we did this. So as you can see, just taking a quick look at this, we can actually zoom out to give you guys a bigger perspective because I do talk a lot about bias and basically building a trading system through the use of bias and management. So if you haven't seen the last video, make sure you watch it because some of the most important things are bias. Now, in some of the previous videos, we spoke a little bit about how as traders, we are prone to see the highs and the lows as potential entry points. And we don't recognize that within all this price action, there are so many intraday swings, intraday moves and grabs that form supply and demand zones that we can use to trade intra, even at the mitigations that might not even, end up running. For instance, if you were to take this buy here, if you were to take that buy and just run it to the mitigation of these potential supply zones here, instead of looking for it to run to completely new highs, that's a very, very profitable and big winning trade, especially since it's a 4-hour trade. And if you're getting involved on it on a 1 hour, a 30-minute, a 15-minute, a 5-minute, or even lower, then this trade can already be 1 to 600. Like, okay, not 1 to 600, 1 to 600 if you want this Lambo, so you need to get that. But otherwise, you can get a lot of really nice trades off this, of course, with proper management above new highs, and potentially to partial even here and get broken even as it moves back. So again, that's part of what risk management is like. Now, having your bias and being preset on that higher time frame is important because when you actually look at the entry I took, you'll notice it was no bigger than one candle. The overall price itself actually ran, if you really want to go to the very low, 1 to 166 RR. Now, I did not catch 1 to 166 at all. Not for a fucking second did I catch that. Nor did I even catch the overall 1 to 30, right? Because of the way I like to partial. But overall, the trade itself was enough to send me from a balance of 277 back up to 2.5K and completely complete the verification for FTMO on the 50K account. And now that the 200K account is coming out, we are going to be doing that in about, I believe, 3 or 4 weeks. And once we do that, we're gonna get we're gonna finish paying off this Lambo right here, which is parked in my garage. As you can see, this is my garage, and we're also going to buy let's see, this uglier looking watch just because we gotta flex on the haters. So just taking a look at this, why did we enter this trade and what was it based on? So overall, at this point, the bias was relatively, even if we look at the 4-hour, is relatively bullish, right? So we've shifted overall bullish. Structure is beginning to shift very, very bullish, especially on the higher time frames. 4-hour has even shifted relatively bullish and holding. However, despite all that, we still took a sell here. So what's funny is at this specific point, I was actually expecting to find buys from this last demand zone right here. So what we'll do right now is we'll draw out this demand zone, because that demand zone was the one that I was using and it was the one that was unmitigated, and we'll draw it out like so. We'll go to the 1 hour, and what you'll notice is we can start to refine that demand zone. And as we refine it, you'll notice something that you saw in the previous video where we looked at a demand zone that existed with a little bit of a liquidity wick above it that didn't tap into it, expecting that to get liquidated on gold. If you remember that, we looked at gold. So if you just want to do that really quickly, we'll run on over here. It was on a much lower time frame, wasn't it? I think it was on a 15-second. We'll zoom out. Let's move ourselves over to the left here. There we go. Let's zoom in here, right? And we'll zoom over here. Yeah. Actually, this was a higher time frame POI, right? There it is. So as you can see right here, same principle is applicable. We have a demand zone with a wick that doesn't touch it, and in the future, we're imagining that it's going to get liquidated. So that's exactly what happens here. And you know, it happens a little bit later too. But if we go back to Euro US dollar right now, and we go back to wherever that location was, I think it was the 1 hour, right? So this was that 4 hour demand zone, refined now to this 1 hour unmitigated demand zone with potential imbalance right here. And now a wick that exists as what? Liquidity. Because if my bias is not met, and my bias in this case is this demand zone, then in that case, anything that's above it or anything that forms on the way, unless it shows me potential accumulation and begins to break up by leaving this wick, then I'm going to assume this is most likely liquidity that price is going to target. So in this case, that's exactly what happened. And as you can see, the trade itself was targeting to that, right? And overall it was a 1 to 40, but like I said, I only ran it like 1 to 20 because of my verification account, and I didn't need to keep it running. But overall, the trade would have been to this open, and would have been collapsed here. So even though it did run whatever this was, 1 to 160 RR, it was collapsed at 1 to 40 and would have been collapsed at 1 to 40. So that is how I manage my risk. I can show you any of my entries that have ran over 500 RR if I really want to. But the reality is I didn't stay in it for the 500 RR. I wouldn't have stayed in for the 500 RR. And over enough time, if I did take those trades and try to let them run to 500 RR, I'd probably have a very, very, very negative win rate and most likely a blown account, in which case I wouldn't have this Lambo and this Lambo, right? So you don't want to blow your accounts. So as a result of expecting this low right here to get mitigated, so what we'll do is we'll draw that low out very quickly. Let's play price back to this area so we can actually kind of see what price was doing around this time, right? So this was the entire trade, the entire from entry to completion. But why did we get involved here? Well, as price is breaking down and putting in new structural points lower, breaking down significantly, it's leaving behind areas of supply above it, right? There's areas of supply up here, there's areas of supply in here that are getting tapped, leaving behind new areas of supply. And that new area of supply, this one specifically, is the one that I was focused on. Now, at the same time, I was cognizant of the fact that we had this one here, which is actually why I was expecting to have buys from this area. And again, I did not buy here because there was no confirmation and there was no Wyckoff like I like to see. So I did not buy here, but the expectation was that price wanted to tap into this area, liquidating these lows, picking up those orders, creating a new demand zone, trading off of it, coming back into it, and continuing to these higher points here before potentially then, you know, going sell to buy or completely selling off past all the liquidity lower. Again, we constantly are in a limbo of understanding that a certain amount of things can happen in this market. We get involved when we see our confirmation. So again, if I haven't told you well enough the first time, your bias is crucial in understanding how you're going to get involved in trades, as well as how you're going to be managing those trades overall. So as you guys can see, we're leaving behind some supply zones and we're heading to these demand zones. However, as we're heading there, we're stopping right before the imbalance. So if a lot of you remember, imbalances basically form when there are too many buyers in the market but not enough sellers. So when price comes back there, it incentivizes new people into the market, thereby allowing liquidity to be formed for smart money or the composite man to come and grab that later. And that's also what Wyckoff undergoes to pretty much have a Wyckoff schematic, right? So like if we were looking at this as a Wyckoff schematic, you can see the selling climax, the AR, a liquidity, right? So we're taking that out, but we're also forming new liquidity by filling in this imbalance right here, right? Filling in more liquidity on the inside, taking out that liquidity, filling in the rest of the imbalance, tapping into our last areas of potential demand zones, and then running up higher, giving us tests, running up higher, and so on and so forth. And as they do this, they again fill price at areas of imbalance. So again, you can follow this imbalance story, and I'll probably make a new video on it soon. But you can see as it follows this imbalance story, we create liquidity, we clear that liquidity, creating inner snowflakes and smaller snowflakes, and continuing higher, leaving behind the same thing. New demand zones, new areas of imbalance that come down to create liquidity that are coming to get cleared before higher prices are potentially met. So again, I was expecting bullishness. Even though this price broke down, the trade overall worked, and we didn't have to enter into any buys. So again, what's going on here? At this specific time, let's actually go to the replay tool right here and go like this. At this specific time, what you have here is actually a major supply zone. Now the supply zone has not been mitigated, as you can see, even if we use the low, has not been mitigated by this wick. You have the same thing happening. You have an imbalance being formed inside here between this wick. So actually, if we draw it out like this, you'll see more value. You can see that it never touched it. So we actually have this imbalance that exists between here and here, as well as this overall supply zone that's been not mitigated yet, so it's standing as a valid area for potential orders that are resting in the market to be tapped into at any of these points, right, before price comes and moves potentially lower. Now, as we get lower, we want to refine this because we understand that within supply and demand zones, there is refinement that can take place because within those, there are other unmitigated areas that also have imbalance that can potentially be filled, because all it is footprints of smart money that are left behind where orders are still unmitigated at negative, and there are chances that those places are filled. And if they are, and those are in line with our bias, and those are in line with a potential schematic, and those are in line with potential structural breaks, then we can be a participant in that market as long as we understand how we're going to be managing our trades along the way as well. So let's go down to the 30-minute, just taking a look at this area. And overall, you can see very quickly that we can refine this overall area to now this place here. And what you'll notice as we do that is that we again have this area right here, which functions as imbalance, but we also have this area here. So we can actually expect already with these imbalances in play that price is going to use these imbalances to fill, create liquidity, fill, potentially touch, right? Give us some kind of Wyckoff and drop off. So again, you can anticipate Wyckoff distribution or accumulation in action because you understand where exactly it's going to potentially create these mitigations and these liquidity plays, because you understand how price is delivered to you by way of supply and demand zones as well as imbalances. So let's get down to the 15-minute. And now we can refine that again. Now, at this point, what you'll notice is we can refine to this last up candle before the down move. That is a supply zone. However, it's been relatively mitigated, so maybe you don't want to use that. Instead, we can continue getting lower. So at this point, it's up to preference. You can have this set as your overall area, and as you can see, I think price does work from there. However, I kept on refining this, and what you'll notice is as we get lower, you spot this last real up candle right here, which has additionally the left behind imbalance, some of it which has been filled, but the rest of which, so now we can draw it to here, has not been filled. So in reality, what's happening is you have this overall imbalance and you have this liquidity resting here. So you know in the future, this area can be filled, grabbed as liquidity, right? So now with all these areas of imbalance in play, you can expect price to fill imbalance, drop off, fill imbalance, drop off, liquidate those highs, drop off, fill the rest of imbalance, drop off, grab the high, break down, structural continuations lower, and look to be involved in the potential down moves. And as those down moves occur, you will be given the opportunity to get yourself into entries off of confirmations if that's what you want to do. Otherwise, it's perfectly valid and fine to just refine it to that last supply zone and have an order pending if you want to. Again, I don't trade this way, but you can have orders pending just at these highs, expecting price to continue to break down significantly lower. And again, even if you just targeted my same low, what you'll notice is that's a 1 to 47 and the actual trade was a 1 to 40. So again, you're sacrificing a little bit of RR sometimes, not even always, just by waiting for confirmation, right? So what's the point of not waiting for it is always my point, right? Especially if price is fractal. It doesn't always give you a setup. It won't always give you the confirmation, but when it does, amazing, right? Let's get rid of this and let's watch this now. So what you have, again, we're not going to go into this super deep. We're going to look at it more in the mentorship. You have price tap that area. Again, let's just get a little bit lower so you can see it tap that area, just like that. You can see that area is being tapped right now, and price moves away from that area right after, leaving behind new imbalances, leaving behind new supply zones, which we can anticipate potential mitigation to occur at. Now, at this point, I was still not interested in being a buyer. I actually waited even longer, so hopefully I can get this low. Oh, please let me go. Okay, nice. It does let me go. 15 second. Okay, this is gonna, hope this works. Here we go. Actually, 30 second might be okay. So what we have is we have price tap into that area and price begins to drop off. Now, as it begins to drop off, as you saw me highlight on the higher time frame on the 5-minute, I believe, we actually have this overall last up move before the down move, or you can refine that to this last up move before the down move right here, right? That is your new supply zone at which you can expect potential mitigation and sells from. So at this point, you could be perfectly valid if you're looking at certain time frames to be a seller at these points, looking for lower prices to be met. Now, if you were, you can see your R goes back down, and that management, you know, it's only at 1 to 10. So at this point, I was still waiting. I think I was on the 32nd. Let's take a look at this, and we can play this out a little bit. Now, price continued to play out. Yeah, so I think I got involved right there. So what actually occurred is concerning the fractal nature of the market that we usually talk about. So I think it was a 15 second, actually, maybe it was a 5 second. There we go. Yep, it was a 5 second. Okay, perfect. So on this 5 second chart, you can see prices breaking down and leaving behind those higher supply zones. And price is now coming up to tap into those supply zones. Now, as it's doing that, And again, you can see it drawn out here, but let's lock this in just like that and zoom in here very quickly. There we go. And what you'll see is I actually had the Wyckoff drawn up in here when I took this trade because I was operating really quickly. It was a 5 seconds, so I didn't have time to label it. But now that we do have time, let's go ahead and label this schematic here. So it might be a little bit hard to see, but you can offer this as a buying climax and this as an automatic rally, which is perfectly valid, or you can use the miniature one inside here. So there are multiple schematics inside of this area alone, but this is the one that I saw. I saw this buying climax right here, followed by this automatic rally, followed by the secondary test, creating, again, those intermediary term highs, creating that trend line. And again, even though it's a 5 second chart, when someone's watching this on a 1 minute and watching those wicks print with the body going up and down, that's still incentivizing buyers and sellers into the market. So even though people are not necessarily trading the 5 second chart, they're seeing the intra movements on a 1 minute chart because they're cracked out and they just want to get in, you know? So they're watching it just like that. And then you have this up thrust right here, right? So again, this is an example of a type 2 schematic. So this right here on its own is actually what we like to call a type 2 distribution. What that means again is that the UT is functioning as its own UTAD instead of a new UTAD being put in place. And again, if you want to know about more in depth about this, we're going to have more videos on it, but also mentorship. Now we have this breakdown, but this breakdown doesn't really get below any structural lows, and instead we leave behind this test, which comes and mitigates some of the supply zones up here, leaves behind this new supply zone, as you can see, this last wick up, right before the down move. And from there, we have this breakdown that breaks down below the AR, putting in our first sign of weakness. So we now have this potential continuation lower because Wyckoff has shown us that it wants to most likely distribute. Now, it comes up, tests that last area, and again, at this point, I was still not a seller. However, after this, we had our real breakdown, and I basically call this the major, it's like the major sign of weakness, but ultimately it's just a normal sign of weakness. That's what I see it as. But this sign of weakness itself, this time, didn't only take out lows here and lows here, it actually cleared out the lows from here, and now from major structural points. So what's happening is even higher time frames, 1 minute, 30 seconds, something like that, is being broken down. And as we did that, what you'll notice is we left behind this very choppy price action. Now the reality is the last up move, right, this last supply zone right here actually was, as you can see, the area that got tapped. Now this is, again, it's not by coincidence. This is because there are orders in here that need to be taken out, even on the 5 second chart. Now those orders get taken out and they get tapped in, and again, you have a beautiful entry right here if that's what you want to take. Now again, this is not the entry I took. I was more willing to get into price and I didn't want to miss, right? So instead I got involved at this open and this high, which, as you'll see in a second, is actually a 15 second, actually maybe even a 30 second. There you have it. The 30 second up move before the down move. So that's the last supply zone on a 30 second. So again, you have to recognize that we're operating on multiple time frames. And we're going to talk about this a little bit more in the mentorship for those of you who don't understand it. And maybe in YouTube, hopefully a lot of you can understand this, especially if you've been following everything else. And if you haven't, make sure you check out the other content. So the 5 second entry happened right here. And again, it could have happened here. So we're actually going to take a look at this one as well, because I just want to know what the RR on this would have been if we were to catch the actual last up move. Because similarly, if you had the patience and you would wait and you were okay with potentially missing this trade, this is a very valid trade as it is the last up move. It's leaving that last supply zone, leaving behind the imbalance between this low and this high right here. So you know that it wants to be filled, right? It fills some of it, leaving behind liquidity, gets liquidated, taps that last area, and then continues significantly lower. And from there, as you can see, we never really got to move back up. So we were watching this play. Actually, we did get a second entry if you were able to catch that as well. And you can see that that was testing the final supply zone left behind right here. So again, just follow price sometimes and you can see all this stuff happening. Now, as you can see, I had this circled. At this specific point, I had already partialed my first position. So what you'll notice is that point right there was only from my end, from my entry, a 3.3 RR. Now, why did I partial here? Because that's part of my strategy. Because that's how I got my Lambo. This one right here and this one right here. So by the way, if any of you have not realized by now, I do not have a Lambo. These are not my Lambos. So please do not sue. But the reality is this is how you can properly be successful and consistent in this market. Yeah, this isn't mine too. So we're just going to close those now. And also, this is the site for the mentorship if any of you want to join. And here's the verification again, in case you guys want to take a little screenshot. Now, as price gets down below this low, and liquidates it, that is when I take my first partial. Now that first partial on the other trade, you know, would have been 1 to 10, which is great. And again, forget the fact that we're operating with 1 pip stop losses, 0.4 pip stop losses, because we are operating on C Trader. We know that spread is not a big deal because we have a great spread provider. So my spread is literally 0.0 pips on this. I think 0.1 at max. So you just take that into account on your risk and you don't get stopped out, especially since we're on EU. It's a major pair. Now, after taking this partial at 1 to 3, I believe that I followed this along as per my own strategy. We can actually drag this out a little bit so I can actually see it. It's just being lost in. So actually, first of all, let's take a look at this trade. This is the one that I did not take, just so any of you out there that think I did take it know that I did not. This is the one I did not take, but if it ran to that same low, to these areas here, that ran already 108 RR, right? And if it ran to the actual lows that we were looking at, which was down here, that was already 1 to 500 RR. So again, I could go on here and I could show you this 500 RR trade, but the truth is I did not catch it, but it's something that you could have caught. I did not catch it though. I caught the other one. So let's look at the one that I actually caught. Let's get back down. Let's go find that trade very quickly. Let's drag this out, drag this down. So again, first partial was taken there. Let's go back to the 5 minute. There we go. Now, I'm only targeting this area here. Second partial was already taken below, I believe, these lows here or this low here. I'm not 100% sure. I don't really remember. But I do believe that I took the next partial right here at 1 to 16, locking in another... No, it wasn't 1 to 16. I'm just trying to do the math. I forget. Because I am operating on much lower time frames. Oh, I remember now. Okay, perfect. There we go. There we go. There we go. Okay, perfect. So that was my first partial right here. My next partial was taken right here at this low at 1 to 7, just because I was willing to see price even give me another re-entry here. However, I didn't get that. So instead, I just let it kind of run. And from there, we just see price. So actually, you can see price does come back up and give you an entry. I wanted the 50% of this supply zone, so I never got the re-entry. But then price continued lower, and at this point, I had it locked in at a certain point because it would have completed my verification. That's why you can see that the verification is literally perfect at 25.10 because I was just trying to complete it. Didn't really matter to me. But again, this was another good partial. If you want to take that, look for re-entries on the way back up. And then you were looking for complete completion of the trade down here. So again, as you can see, this type of price action for someone that just took this randomly would be potentially scary, especially if it continues even higher. But for me, price action like this is just intermediary now, and it doesn't matter. So yeah, as you can see, at this point, probably you would have been stopped out. Maybe, I'm not sure. Maybe if it gets above that, you'd be stopped out. Otherwise, you'd probably be still in this. And price does come back down. Does it? Let's see. To complete you at, there you go, at this low. And again, it continues way lower. We can jump back out to a higher time frame and we can go and watch that a little bit. Yeah, you can see that price goes, it comes back up for a little bit, so you actually had to find buy from there if you want a lower time frame. Comes way through it, comes way all the way back up, comes all the way back down overall, and we had more trades in here. It doesn't really matter about that because the overall FTMO challenge was completed right here on this sell. And actually, I think I was... No, yeah, it was fully completed on this. This was just on my other individual account later. So, as you can see, I just wanted to make this video to go over the verification, to tell you guys that sometimes losses are part of the game. Again, I was being dumb with these losses, so there's no real excuse for it. But after this point, you can see that we just kind of slowly crept back up because, you know, I didn't want to go into larger drawdown. But again, verification complete. 50K is fully done. The funded account will be here in 4 days, and then I'll be able to work on the 200K in about 3 to 4 weeks time when I'm done with all my individual things at home. And this is how we caught it. Again, you can go and study this yourself. Go and find the structural breaks down, leaving behind the potential supply zones that are unmitigated, refining those supply zones, seeing them get tapped in, waiting for confirmation, and getting involved, and try to see what the highest RR you could find or how you could consistently get involved down the line. So thank you so much for watching, guys. I hope you enjoyed. I hope you learned something from it. This was my verification on FTMO, and I'll see you guys in the next video.